What's up guys, and welcome to Wall Street Millennial. On this channel, we cover all things stocks and investing, and today we're going to go over the greatest gains and losses on the Wallstreetbets forum so we can learn from other traders' experiences. This video is made possible by our channel members. Members get access to all of our non-time sensitive videos one day in advance. First off, we have user Kip Drody's BFF, who learned the hard way that stocks don't always go up. Since February 11th, he has lost almost $160,000 playing weekly FDs. He was bullish on electric vehicles, so he bought almost $60,000 worth of Tesla calls. Unfortunately, he bought in at the top, and Tesla has fallen more than 20% since early February. This cost him $60,000 in losses on this position alone. He also lost a similar amount of money on call option positions on Blink Charging. Blink Charging designs, manufactures, owns, and operates electric vehicle charging stations. Blink was caught up in the EV craze of the past year and was one of the best stocks of 2020, rising more than 36-fold from less than $2 a share to a high of $60 a share. However, the stock has since cooled off and declined more than 30% from the high. This decline cost the OP $60,000 in losses. Like a true Wallstreetbets degenerate, both of his $60,000 losses came from FDs with just one day till expiry. On Thursdays, he would buy out of the money calls expiring the very next day. This strategy does give a small chance of printing massive gains, but usually they expire worthless. Both of the times he did this, he would wake up the next day to find himself $60,000 poorer. We wish you luck on your future plays. Next off, we have user Xyros, who is one of the many Wallstreetbets casualties of the Blackberry sell-off. Blackberry stock benefited from the GameStop short squeeze in late January, soaring to a high of over $25. However, it has failed to hold on to those gains, and the share price has fallen by more than 2/3. On March 31st, the company released their earnings results. Revenue missed analyst expectations amid lower than expected demand for their QNX software. This sent shares falling almost 10% and the stock closed below $9. This was not great for this Wallstreetbets user as he was all in on Blackberry calls. The negative earnings release caused his calls to tank in value by more than $40,000, so he is now down $67,000 from the time he initiated these positions. He also lost more than $2,000 on BioCryst Pharmaceuticals, which has fallen more than 20% over the past couple weeks. His final losing position was in Sundial Growers, a Canadian weed company that has declined 30% in the past few weeks, costing him a $5,000 loss. In total, he is down almost 75% on his portfolio. Despite these losses, he is still a long-term believer in Blackberry and views the recent pullback as a buying opportunity. Unfortunately, some of his calls don't expire till January 2023, so the stock only has to go up within the next 2 years for him to make money. The OP thinks that Blackberry should be worth $80 billion. Currently, the market cap sits at less than $5 billion, so his price target implies a 16 times upside. He notes that NIO's current market cap is $60 billion. He thinks Blackberry's business is worth more than NIO's and should therefore have a market cap of at least $80 billion. Next off, we have user Tron Bronson, whose meme stock investment strategy has not worked out very well over the past couple of months. In total, he lost about $25,000 on his trades. The average interest column adds up the percentage gains of all his trades. For example, he made 193 trades on the SPY and on average lost 4% on each trade, adding up to a 772% accumulated loss. His biggest loser was on the SPY, where he lost $14,000 buying puts as the market went up. His other positions were mainly made up of meme stocks he saw on Wallstreetbets and bought without doing any DD. Every time he was losing money on a trade, he would never sell and instead double down. He bought meme stocks like GameStop and AMC at the high and sold at the lows. The biggest single loss that he had on an individual stock was PSTH. PSTH, or Pershing Square Tontine Holdings, is a SPAC run by legendary investor Bill Ackman. It has not yet announced its acquisition target, but nonetheless the stock increased more than 45% leading up to its peak in February of 2020. Investors were bullish on the SPAC because they were confident Ackman would choose a high-quality company to merge with. Over the past few months, SPAC share prices started to decline as valuations got stretched and investors became more weary of their lack of transparency. Since its peak, PSTH has fallen almost 30%. The OP bought in at the top and lost more than $4,000. This post goes to show it's important to always do your DD before buying any stock. Also, never short the SPY under any circumstances. After incurring these losses, the OP decided to switch up his investing strategy and is now selling options on 3x leverage ETFs. We wish you luck on your future plays. Next up, we have user Matacumbi, who posted some insane gains on 2 different stocks. The first is Cleveland Cliffs, a medium cap stock engaged in mining operations in the Midwest. He owned thousands of dollars worth of calls on Cleveland Cliffs, mostly expiring in the near future. So far, he is up $110,000 on those calls. Cleveland Cliffs stock has been on fire in this past month, up from $14 a share to more than $20 a share. The six-figure gains he has made so far currently make up the majority of his portfolio value, which currently stands at $130,000. The other stock he has a position in is US Steel, which has also done extremely well in the past month. These commodities companies have been on a tear recently, outperforming old winners such as tech as the reopening draws near. Investors think that a rotation into industrials may be more accretive than stay-at-home stocks, and thus stocks involved in heavy industries have all done well. The OP had smaller positions in US Steel, but was still able to make a couple $1,000s on two short-dated calls. User Race to the Base tells the OP to realize those gains and put them into shares instead. He thinks that the risk and volatility associated with short-dated calls is not worth it and will end up making the OP lose a significant portion of those gains. The OP then responds that he indeed did take some of the money off the table, not wanting to be a pig. However, he is still in some April 9th calls, with about a week and a half left till expiry. Congratulations on your massive gains. Next up we have user Hayton Shorts, who put his money where his mouth was and went all in on weed stocks. He holds a massive portfolio of more than $650,000 worth of stock in Tilray and Aphria, the two weed companies that entered into a merger agreement last year. Although he only holds stock and not calls, because of the sheer size of his position, 23,000 shares of Aphria and 9,000 shares of Tilray, his one-day gains were massive. 9% appreciation on both of these stocks allowed him to achieve $54,000 of gains in a single day with his stocks. The weed stocks haven't even done that well in the past week, with Tilray making the majority of its gains in the past day. The OP offers some insight into why he is so bullish on both stocks. New York State recently legalized marijuana for recreational purposes, which the OP thinks will be good for the entire industry. The OP says that although Tilray and Aphria are Canadian companies, they might start acquiring American marijuana companies to benefit from the expanding US market. Congratulations on your trade. Next we have user Oofy with some 5-figure gains on MVIS, or Microvision. This Robinhood straggler owned 1,000 shares of Microvision at an average cost of $1.41. That is a very impressive cost basis because it means that the OP was a very early investor in Microvision. Microvision has since increased in share price many times over and has now become a 10-bagger from those levels. Most recently, it jumped 50% in one day on no apparent news. In addition to the shares, the OP also had a couple calls that are now in the money after today's surge. This price action has made the OP a total of $17,000 in gains, or more than 1,000%. One commenter points out how impressive the OP's diamond hands were to be able to get in at $1.41 and yet not even sell when Microvision rose to $24 in February. The OP says that a 10-bagger status was not enough for him, and he was going for 50-bagger. So instead of selling stock, he would sell covered calls on short-term strength. From those short calls, he has made back his entire initial investment and is now playing with all house money. Congratulations on your trade. Alright guys, that wraps it up for this video. If you like the content, make sure to smash that like button and subscribe for future videos. Also check out our second channel, WSM Research, and follow us on TikTok and Instagram. As always, thank you so much for watching, and we'll see you in the next video. Wall Street Millennial, signing out.